The first thing that needs to be done when setting up your accounting system is to define your chart of accounts. The chart of accounts is a roadmap for all of your financial transactions, and the proper setup will help your organization generate more meaningful financial statements both internally and externally to outside funding sources. In Accounting 101, you learn that when you set up your chart of accounts, you should assign a logical numeric order to all of your accounts. There are 5 categories for all of the accounts in your system. First, there are assets. Assets are things that you own, such as cash, fixed assets, prepaid expenses, accounts receivable, and other things that your business owns. Liabilities are what you owe. Accounts payable, payroll taxes, sales tax payables, notes payable, and possibly deferred revenue. Then there are net assets. The net assets are the net worth of your business, or in nonprofit parlance, your fund balance. The assets, liabilities, and net assets appear on your statement of financial position or your balance sheet. Next, you have revenue, which is money coming in, such as donations, fundraising event revenue, grants, investment income. And then finally, you have your expenses, which is money going out for salaries, payroll taxes, professional services, utilities, and other expenses for your nonprofit. Your revenue and expenses will show up on your statement of activities or your income statement and for your budgets. We also learned in Accounting 101 when you're assigning numbers to all of your accounts to follow a logical order. So your assets will start with the number 1, your liabilities with 2, your net assets with 3, revenue is typically 4, and then expenses 5 through 9. Using this logical numbering system, it makes it a lot easier when you have to print your financial statements, your trial balance, and it makes it a lot easier when finding specific accounts. So once you've defined the parameters for your chart of accounts, you then assign your numbers. So cash could be 1,000, salaries could be 5,000, and the numbers could be anywhere from 3 digits to 5 digits long. But that's not it for nonprofits. You need additional segments to help segregate your activity by funds and functional areas, such as management in general, fundraising, and all of your programs. Some nonprofits actually need another layer to identify their grants and funding sources. So a true nonprofit chart of accounts will have your natural account number for your assets, liabilities, net assets, revenue, and expenses. There will be another segment to identify your funds and at least one more segment to identify your functional areas. So a nonprofit's chart of accounts with its segmented table-driven system is like file cabinets. So let's say you have 3 funds, unrestricted, temporarily restricted, and permanently restricted funds. You'll have a separate file cabinet for each of those funds. Each drawer in your file cabinet is like your program area. Inside the drawer, you have separate files for each of your accounts. So when you think about setting up your chart of accounts, make sure that your system will be able to handle a multi-segmented account structure. So when you're looking at accounting systems, you definitely need a system that will allow you to separate all your financial activity by the 3, 4, or 5 segments that you need that define your organizational structure.